What a green day today, guys. What a green day. And we're actually running up even more after market hours after we got Disney's earnings, Uber's earnings, Twilio. So we have a lot to break down in this video, including those earnings I just mentioned. And we're also going to break down some other stocks and overall what the markets did today, which a lot of you guys probably know. Again, it was a crazy, crazy green day. So if you all find value, hit the like button, subscribe. Make sure to join my Patreon if you all want my buys, sells, call outs, morning update videos, plus more. That's on Patreon, link down below, and let's get right into the video. So check it out, guys. SPY ended up rallying into the close. If you all remember, my previous video today was right before Power Hour. We ended up selling off a little bit during Power Hour, or at least heading into Power Hour. And actually, up until 3:20 p.m., we were selling off. And then the markets ended up ripping. SPY went from 456 to about now 458 after market hours. So we did close up about 1.5% on SPY. Triple Q ended up going up over 2% on the day, 2.12 to be exact. Great day for Triple Q. It closed at 366.73, and now it's up almost $1 after market hours. And just like SPY, you guessed it, Triple Q rallied into the close after that little Power Hour sell-off in the initial couple of minutes of Power Hour. So we closed off very strong today, guys, heading into the CPI data release tomorrow, which I'm very excited about. I'll be honest with you all. I'm getting up early. I'm getting my coffee, and I'm going to be on that Fed website because I'm super pumped to see what this number is going to be and how the markets are going to react to it. And we've covered it before on these YouTube videos, guys, recently. This number is probably priced in the stock market right now, the inflation number. But if it's worse than expected, stocks might get rocked tomorrow. If it's cooler than expected, inflation's not that bad. It's not as bad as expected, which I don't think is going to be the case. But let's say, for example, that's the case. Markets could continue this massive rally. And like I've mentioned all of today, the past couple of days here on the channel, guys, this market, Triple Q and SPY, both of these ETFs, which track the NASDAQ and the S&P, right? They're both by the 180 SMA resistance on the 4-hour chart. That still stands right now, even though we rallied into the close, right? We're still under a big resistance on both of these ETFs, and that's going to be a point that I'm going to be watching tomorrow and on Friday and next week. If we want this market to go higher, Triple Q's got to break 375. SPY's got to break above, I think, 465, 460. That's just the reality of the matter. So yeah, what do you think? What do you think? Markets are crushing it. All of us made money today on paper for the most part, unless you're shorting the markets, which that's a very dangerous game to play. So very nice day. Let me know your thoughts down below in the comments. Make sure to hit the like button, subscribe, do all that good stuff. It helps your boy out in the algorithm. I really appreciate all of you out there watching as always. Now let's talk about some earnings. And these earnings, I'm not going to lie, I usually don't like to look at the stocks before making the video, but today I looked at Disney and the stock's up a lot. Let's talk about it. Let me pop it up. Let's do it. DIS. And I didn't look at their earnings, but I did look at the price action, which again, I just said the stock's up a lot. Look for yourselves, guys. It closed at $147 today, up 3.3% on the day. And now after market hours, on top of going up $4.50 in the day, on the day today, it is up another almost $12 after market hours. Let's freaking go, guys. I'm excited because I'm a Disney shareholder. I've been a very long-term Disney shareholder. I mean, I've held the stock for years at this point. And whenever one of my companies does well, I'm happy. I'm a happy guy, guys. And when they're not doing well, I don't really put my emotions in the stocks or the companies. You know, sometimes, of course, we're humans. We get emotional. But I don't try to get down on myself if a stock's doing bad. But when it's doing good, I like getting a little excited, but I also try not to get too excited when it's doing well. You know, I'm trying to keep a level head here, but I'll be honest, I'm a little pumped right now that Disney's up $12. So let's see the numbers. Let's see these juicy old numbers. What ended up happening here? So we all know Disney's been in a rut, right? They cut their dividend. They lost a bunch of money during the pandemic. The parks got crushed. Cruise line business got crushed. You know, the streaming services did well sale. But overall, I mean, the business has been going through a rough 1-2 years at this point. So let's see what they did. Adjusted EPS of $1.06 versus 61 cents. So they crushed the EPS estimate, which is great. Sales came in, oh my goodness, guys, they beat sales by $3 billion. Look at that, $21.82 billion versus $18.63 billion estimated. So they destroyed EPS, destroyed sales. They didn't just beat, they destroyed the numbers, guys. Nice double beat for Disney. They added about 11.8 million Disney Plus paid subscribers in Q1, which is solid. Let's see here. What are the parks doing? Parks, experiences, and products revenue of $7.23 billion. Disney Media Entertainment distribution revenue $14.6 billion. Direct-to-consumer $4.7 billion. Disney Plus subscribers are now at about 130 million. What's Netflix at? Like 200 something? I forget, but Disney's right on Netflix. I mean, not right on Netflix's tail, but Disney's getting there. Let me tell you, Disney's getting there. And let's see here. Oh, look at that. Disney Q1 parks and revenue or experiences revenue, like I said, was $7.23 billion. The estimate was $6.5 billion. So it's obvious why the stock is ripping. The double beat, better than expectations on the parks and experiences revenue, which is the segment of the business that got hit the most, right, during the pandemic. Now that it's bouncing back and in a major way, this is going to help the stock price. It was inevitable, guys. This is what we were talking about. And what I've been thinking to myself when I was buying Disney, I mean, I haven't been buying a lot of Disney over the past couple of months, but each time I bought a little bit, because I have bought a couple of times over the past, 6, 8, 12 months. Every time I bought, I'm like, I think eventually parks, experiences, this is going to come back. It is as of now. Real time, right now, it's coming back, and I'm pumped about it, guys. And let's see here. Revenue per paid subscriber. This is big. Disney average monthly revenue per paid subscriber for domestic Disney Plus increased from $5.80 to $6.68. That's a big pop, guys, considering how many subscribers they have. That jumped up almost $1 per paid subscriber. That's pretty big. And revenue per paid subscriber, and by the way, that was for domestic subscribers, but for international subscribers, it increased from $4.73 to about $5.96. So that jumped $1.20. So this company, I mean, I'm not seeing anything that's necessarily bad unless I'm missing something. Let's see here. Disney Plus CEO or Disney CEO reaffirms Disney Plus sub-target of 230 to 260 million by 2024. Okay, that's good. Literally, guys, I'm not seeing anything where I'm like, oh, that's bad. That's bad. It's not like I'm seeing anything on guidance or anything to be worried about. So I guess it makes sense that the stock's up almost $12 after market hours. And from this morning, literally from this morning, guys, the stock is up about 13%. So I'm loving it. I'm loving it, guys. No kidding. This is great. And we are at a big resistance in the short term. Keep that in mind. Disney is now testing 158 to 160. That was resistance pretty much all of this year so far, even in December. So if we clear above 160, which is definitely possible, I'm going to put my alert right there right now. If Disney takes that point out, this could probably start gunning for the 170s again. The next gap to fill would be anywhere from 168 to about $170. So shout out to Disney shareholders, shout out to the company. They crushed it. I'm a happy guy. I'm a happy shareholder, guys. I'm loving it. The next one here is Uber. Let's pop Uber up. They reported, and I also cheated a little bit on this one, guys. I looked at the price action, and I noticed the stock's also up, just like Disney. Uber on the day went up 4.83%, and that's at close, right? And now after market hours, it is up another $2.50. So it's up another, what, 6 something percent after market hours. Very big move for Uber. So let's see what they ended up doing here. Give me a second, guys. Let's see here. Where are you, Uber? Come on. Where is this? 44 cents up from 54 cents in the red last year. So they made a profit, 44 cents EPS versus negative 54 cents last year. Sales beat 5.78 versus 5.36 billion. So that's a nice beat on revenue. What's the guidance? Gross bookings at 25.9 billion versus 25.7 estimated. That's nice. And let's see here. Oh, they updated it. Looks like they lost 26 cents on an adjusted basis for EPS. I'm not seeing anything on revenue, but guidance rather. But overall, the stock's running on that revenue beat. They beat revenue by about 0.4 billion compared to the estimate. And what you're looking at here is the 4-hour chart, and we all can tell, it's pretty obvious that at this point Uber is pretty overbought, right? RSI's at 80 on the 4-hour chart, and we're right towards the top of this channel on the 4-hour chart, which you guys can see it's been resistance for a couple of months, right? So if we take out this point, let's say at about $45, which we're not too, we are close to 45, but we are about $3, under 45 bucks right now. But let's say we break 45 over the coming weeks, right? That is where the overall downtrend could start to reverse. We might get a breakout at that point. So I put my alert at 45 bucks on Uber. I'm going to be seeing what happens at that point. And another stock I cheated on. All right, I'll admit, guys, I cheated on all these stocks today. I looked at all the stocks before the video. Twilio is up like freaking crazy. This stock closed at 202 today, right? Up 1.7% on the day. And now after hours, it is up to almost, it was at 265 earlier in the after hour session. Now it's at 238. It's still up 36 bucks after market hours right now. And to put that into perspective, from 200 bucks to 262, it ran up initially 30%, 60 bucks a share after it reported earnings, and now it's cooling off a bit, which makes sense. Profit taking, weak hands, whatever you want to call it. Stock's coming back down. So let's see what they ended up doing. Let's see here. Where is it, guys? Come on, where is this now? I can't see it. They lost about $291 million for the quarter. That equates to about an adjusted EPS loss of about 20 cents. They did a revenue of $842 million, and I wish they showed us the estimate. Sometimes on ThinkOrSwim here on the live news tab, where I do get these numbers, guys, sometimes I don't see the estimates. They don't put the estimates for some reason. It's all good, though. It's all good. The stock's up 25%, so I'm assuming they did beat the estimates, right? And it looks like they're guiding up on revenue based on what I'm seeing here. Q1 sales guidance tops estimates. They're looking to do $855 to about $865 million in revenue for the quarter. It looks like losses widen, but the sales are growing. So I guess that's a good sign, because overall, guys, not every company is focusing on profitability now. A lot of companies are focusing on growing the top line, right? And then they're going to focus on profitability later on. It all depends on what stage in the business cycle the company is. Are they in a very early stage? Are they just starting out? Are they in the middle? Are they, a mature company about to die off? It all depends. And their goals, the goals of certain companies are different from other companies based on what stage of the cycle, business cycle they are in. So for Twilio, going back to the 4-hour chart, you guys can clearly see it's now starting to break the downtrend that it's been in for months, pretty much ever since July, August. You guys can see it's been in this downtrend. Now we're breaking out of the 180 SMA. We're trading at a multi-week high. This could end up going a lot higher. Who knows? This momentum could really take us higher. So the next one is Nike. They didn't report earnings today, but I'm really liking the consolidation that I'm seeing on Nike right here at about $140 to about $145. You guys can see, based on this channel I'm drawing out here, this is holding the bottom of the channel. And, we haven't really budged under 140 over the past couple of weeks since the middle end of January, right? So that's a good strong support, about 145, like I said. If this thing breaks out of 150, which was the high from, I believe, last week, let me put my alert right there right now. If we break above 150, Nike might end up shooting, maybe not to the moon, oh my God, YOLO, let's YOLO some calls, guys, let's buy some calls. I don't think it's going to do that. It might not go to 200 or to the moon like a lot of you guys might think it might. Who knows? It might. Who knows? I think a more conservative price target would be if Nike went up to, let's say, $150 to maybe $155, or maybe not 150. If it breaks 150, I think 155 is next. That was support middle of December. That would be the next gap to fill. And if we break 155, that is when it could maybe go to the moon. Maybe you could say it at that point. But then again, it probably won't go to the moon. It might just go to about 163, which was support early in this last month of January. So watch out for Nike. Set your alert at 150. That's what I ended up doing. The next stock here is Freeport-McMoRan. Let's pull that up. FCX. This one has been on a tear, guys. Take a look at this. It's above the moving averages. Uptrend is clearly continuing, right? We're seeing today alone it went up 7%. We're also seeing an inverse head and shoulders that looks like it's playing out. Left shoulder, head, right shoulder. You guys see that, right? We're clearly trying to complete that right shoulder. That might happen anywhere from $45 to $46, and we're at about $43.50 right now. So there could be another couple points upside, percentage points upside here on Freeport-McMoRan. So keep your eyes on this inverse head and shoulders, and mind you, it could maybe pull back in the short term. Might cool off a little bit, but overall, as long as it's above the moving averages, which now it's well above the moving averages, I think this does have more upside, more momentum. So watch out for FCX. Another one which reports tomorrow, and I've been talking a lot about this one, it is Datadog, ticker symbol DDOG. DDOG, I like to call it. DDOG, guys. Watch DDOG. This stock went up 2.5% today. It's above the moving averages. The inverse head and shoulders on this one is playing out, and it has a long ways to go. I think this could end up going up 175, 180, 185. It all really depends on earnings coming out tomorrow morning. So seriously, guys, add this one to your watch list. I'm not telling you to buy it. I'm not telling you what to do, but I am telling you, add it to your watch list, because tomorrow morning there's likely to be a lot of volatility in this one. Just flat out. Considering, again, they're reporting earnings, it's starting to break out. Today it had a nice green day. The inverse head and shoulders is playing out. So watch out for Datadog for a move up, maybe towards, again, 170, 180. That's definitely possible, in my opinion. And we have GME, GameStop. GameStop, and first and foremost, guys, it's still in an overall downtrend on the 4-hour chart. But if you zoom in on the 20-day chart, it tells you a little bit something different. Look at this. On the 20-day chart, today we went up 7.5%. That's first and foremost. And second of all, we broke out of 118, which I mentioned on Patreon, I think yesterday or 2 days ago. I made a post about GameStop. I said how this point 118, if it breaks, this could end up going 125, 130. And not to toot my own horn, but lo and behold, that's what happened. We broke 118. Now we're in the mid-120s. And going back to that 4-hour, remember, the 180 SMA is in the mid-120s. That's a big resistance right now. If this point breaks, we might be seeing a move towards, let's say, next big level of resistance is 140 to 150. This thing might end up rallying a little bit. And considering how beaten down it is, I would not be surprised if that happened, quite honestly. So yeah, guys, that's pretty much it. We covered everything I wanted to talk about in this video. Great earnings from Disney, Uber, Twilio. Awesome day in the markets. But realize the number tomorrow morning, the CPI number, it could change everything. So don't get too excited. It could change everything, and we're going to be covering that tomorrow. So make sure to be in tune for that. Subscribe, hit the like button, drop me a comment, join my Patreon if you guys want all my real-time buys, sells, call-outs, morning update videos, all that good stuff is on Patreon, link down below. And you guys could also get your 5 stocks for Moo. Don't forget to do that. Use my link down below, deposit $100, and you guys get up to 5 stocks, each of which could be valued up to $3,500. I'll catch you guys in the next video. Thanks for watching as always. Peace. Peace out.